Hello, everybody. Welcome to our live stream today, brought to you by the Primexbt Trading Academy. My name is Dirk Hartig. I'm the head of trading education here at primexbt.com. I'm also a professional trader with, this year, 25 years of experience. And today we have something special planned for you because, it's already half over. 2023 is already half over. Can you believe it? Time is running like crazy. And if you are watching this today, I can only congratulate you, actually, because that means that you are still here. That you are still here after the severe bear market of 2022, whether you were invested in crypto, whether you were invested in stocks, where it was very, very hard last year to earn money. And that means you want to take your fate into your own hand, and you want to make sure that once a new bull market starts, and maybe it has already started, we're going to find that out later, that you are going to be on the winner side today. And yes, today I want to talk about price projections. I want to share with you what I'm investing in currently and what I expect for the remainder of 2023, and of course for 2024, maybe a little bit of 2025. We're going to touch base later on as well, to share with you what my strategy is going to be, what I think where prices will go, whether it's about crypto, whether it's about Forex, whether it's about stocks. So you can maybe take this, as inspiration, as guidance to kind of check, like, is this what you're thinking as well? Or maybe you're also expecting something completely different. I can see we have a lot of people that joined us already today. We're for sure going to do a Q&A later again. And if you're watching this live right now on YouTube, or maybe also on Twitter, and you are also on our Discord channel, that means you maybe want to participate on our $25 giveaway for your trading account. All you need to do for this is to ask a question here, take a screenshot of that, and then post it onto our Discord channel. And if you are the lucky winner, you get $25 onto your trading account. So, that's a nice way to spend maybe half hour or 40 minutes and get some extra money as well. I see a lot of familiar names here. So we have, for example, Lompra Ragnar, who joined us again, one of our frequent watchers. How you're doing, Lompra? Sorry, Ragnar. We have Carrie again here. We have Mundo M Crypto, also one of the people who are joining a lot. Welcome, guys. Very happy to see you again here, and hope you can make the most out of the things I want to share with you today. As I said, we are going to talk today about, first of all, I want to touch base again on what I've been proposing in terms of forecasting for the past 10 months, you can almost say. So what I expected for 2023 to happen, but I think it's also time to update this forecast. So as a second point today, I'm going to tell you what I expect for 2023 to happen for the rest of 2023. And of course, for 2024, we're going to look at crypto charts. We're going to look at some Forex pairs, especially US dollar based pairs, of course. And of course, also on the stock market. And later on, there is going to be a QA session, and I'm going to jump right into it. Let me just sort this out and take a sip of my coffee. Probably not going to be able to sleep tonight then. Let's quickly touch base on what my forecast was so far. If you have been a frequent watcher of that crypto show, of our channel here, if not, by the way, you should definitely hit this like button and the subscribe button so you never miss out again. You might have noticed that since September last year, early October, I was talking about a bottom of a stock market. So basically, when we saw here that inflation, but this is US inflation, the other chart here is the S&P 500, the biggest, most important, at least in my opinion, stock index in the world. When inflation came ticking down from back then over 9%, I said if we look into the history of when we were over 6% of inflation and this happened, inflation started ticking down again, usually this was the time where the stock market made a low. And a low in the stock market means nowadays also probably a low in the cryptocurrency markets, which came later. And you can see this lined up so far, at least pretty nicely. I said back then, low is probably going to be somewhere around 3,400 points. And it was, as a matter of fact, I called this here the soft landing zone. We didn't quite hit 3,400, so around 3,525 points. There was the bottom back then. But I think this analysis was pretty much on point back then. So this was the go-to from a fundamental view. That's why I said, like, things should now look better again. Looking better does, of course, not mean that it goes straight up in a line. Looking better means that there's a little bit of a turnaround on the market, and we could see, of course, also here in the S&P 500, this turnaround, if you are more into technical analysis, which is, of course, totally okay, was then reached when the S&P 500 broke over this long-term bearish trend line that we started forming here in the beginning or end of 2021, beginning of 2022. We broke over this, and now we've come a long way, and the question, of course, now is how is this going to continue? For the cryptocurrency markets, I said back then, in my opinion, why is this looking so weird? Let me reload this one quickly. Here we go. This one is better. I said, for me, the last 18 months prior to the halving are the most important time to build a position, because when you're going to get yourself in a good shape to really profit off the bull market, that it's probably going to really kick off with the next halving of Bitcoin, which is going to be somewhere in late April, early May 2024. So it's less than a year actually that we have until this halving kicks in. And I think it's very important to now take the necessary steps so you can actually profit from what probably is going to be an event where history repeats itself, meaning like that we are going to see a new bull market in cryptocurrencies, that we might see also a new bull market in stocks, and some interesting developments in Forex. So I'm going to update you on this coming. So this is what I said back then. First of all, stock market low was probably in. It's going to stay volatile, but it slowly should look better. Definitely does here. So if you followed me in investing and bought here somewhere around, let's say, 3,500 to 3,900 in the S&P 500, you're in good shape and probably in better shape than most hedge funds out there. And same with Bitcoin. So here the strategy also remains during these 18 months prior to the halving. I mean, now we are like 10 months away from the halving. This is the time to accumulate. Can still be, of course, a volatile phase. We are going to look more into this later, of course. So what is going to be now the thing going forward? That is, of course, the interesting question here, in my opinion. What can we expect, like especially maybe in the upcoming 2 to 3 months? And I think we are up here for a very, very challenging and difficult time on the market, because we now have like two things really colliding. One thing is that we've seen that inflation rate is coming down, still coming down. I mean, the last reading here with, do we have it? Sorry, here was at 4%, so lower than expected. Remember, last year, September, we were still at 9.1%. So inflation is coming drastically down. And this led to the situation where the Federal Reserve Bank in the USA said, okay, we are going to pause now raising interest rates. So the interest rate currently is at 5.25%. You can see this here on the right on the chart. By the way, do I have my chart up there? Yeah, I do have it. Very good. And it's now, of course, interesting. Now, what the Fed says now is be prepared. Last week, Jerome Powell, chairman of the Fed, gave a speech, said, like, be prepared. There's probably still going to be like 1 to 2 interest rate hikes for this year, because we need to continue to battle inflation. I do not necessarily agree with that. Although, of course, it's a possibility that, for example, in July, so next month, the Fed is still going to one more time raise the interest rate. Right now, what the market is thinking is that 79.4% of market participants are thinking we are going to see an interest rate hike in July, one more hike. So, and this is interesting. Of course, it's the majority of people, but it's down. If you would have looked at this figure like 2 weeks ago, it was still at 94%. So it seems like that the market continues to slowly believe, oh, maybe the Fed is actually not going to hike. I'm very sure this percentage is going to get lower over the upcoming 2 to 3 weeks until the interest rate decision is really there. A lot of is going to depend, obviously, also on how the next inflation reading is going to be. But it doesn't really matter. Even if we see interest rates being risen one more time, we are now already in this phase of what I call interest rate plateaus. So what do I mean by this? If you look at this chart here, this is the US interest rate since 1987. And you can clearly see that after phases of raising interest rates, you kind of had those plateaus here where the interest rate stayed stable for a period of time. And this period of time was anything between, on the lower end, 4 months until the Federal Reserve started lowering interest rates again, until the longest was here 17 months. And last time that happened, by the way, was here in 2018. The interest rate stayed stable for 6 months until the Fed started lowering them again. That, of course, was because of Corona then. So the expectation now is if we have reached already this plateau, we should see now a period between 4 and 17 months of stable interest rates until the Fed is going to probably lower interest rates again. Because what you can clearly see is that once we reach this plateau, there was never in a season, so to say, or a period where the Fed continued to raise interest rates again. So this plateau always followed a drop of interest rates. And for me, this is very, very special and interesting because this could, by coincidence, then very much align with the next Bitcoin halving. So as a reminder, next Bitcoin halving is going to be about late April, early May 2024. So in about 10 months from now. And it could very well be that around that time, we are going to see the Fed also lowering interest rates again. And this would be like adding a little bit of oil to the fire already. So you would have like an environment in Bitcoin then already, because the reward for finding a new block every 10 minutes is cut in half to 3.125 Bitcoin then. And you have lower interest rates where risk on assets really can blossom again. Why can they do that? Because as an investor, you always have to make a choice. Are you going for the safe return on your investment? The safe return on investment being, for example, you put your money with your bank on a saving account, or if you're an institutional trader, you buy so-called treasury bonds. So debt that is issued by the USA, for example, and for that you, for example, get here 5.25% at the moment. So are you going to settle for this, or are you going to invest in more risky assets? And risky assets mainly are then stocks or cryptocurrencies and for the additional risk you are taking there, you have a chance of earning also a much higher reward. So for example, 10 or 20 or 50 or 100% in some stocks and some cryptocurrencies, also of course 1,000% and more. And once this interest rate starts going down again, we will see money shifting into the stock market and probably also into cryptocurrencies again, because investors are going to look for alternatives. They are going to say, okay, I'm for my safe bonds at my bank. I'm not going to get a lot of interest anymore right now, so I have to invest my money elsewhere. And I think this is pretty much going to collide here, as I said, with the Bitcoin halving. So I wouldn't be surprised. And this is like my first forecast, so to say, here for Bitcoin in this case, to see if we're at the around the halving, somewhere between like 40 to 50,000 US dollars already in Bitcoin. And then my target for 2024, 2025 would be somewhere between 100 and 300,000 US dollars. That depends. I know this is like a large margin, so to say, 100 to 300,000 US dollars, but it's going to highly depend, of course, also on what regulation is going to do. Are we going to see regulators, especially in the USA, fighting cryptocurrencies, or are they going to embrace cryptocurrencies more? Right now, we are kind of torn apart. We see like, okay, the SEC, they sued Binance, they sued Coinbase, then they kind of started their own stock exchange called EDX. And so whatever's going on there, this is probably going to be one of the big issues going forward of 2023 to 2024. Now, in the meantime, especially for the next months now, and I'm talking about July, August, September, maybe October also still, it's the performance of Bitcoin and I'm always saying Bitcoin here. Of course, this you can copy paste this for the whole of the crypto market, because Bitcoin dominance is above 50% again. So Bitcoin's market cap makes up 51.7% currently of all the thousands of cryptocurrencies that we are seeing out there. So wherever Bitcoin is going, all the altcoins are sooner or later going to follow there. And by the way, this is also very, very typical what we see when we are in the making of a new bull market, that Bitcoin dominance goes up, and that within a risky asset, money shifts to the lesser risk in that risky assets, if you get what I mean by that, maybe. And so I wouldn't be surprised here if we see going forward maybe something like this. So this is the S&P 500 symbolizing all of the stock market. So again, here it also doesn't matter if you are investing in the German DAX or US stocks, the Nasdaq, and so on and so forth. You're pretty much going to see kind of the same patterns emerge here, and that maybe we even fall down below this, what is now a support here of 4,300, test here again the 50 days moving average over 100 days moving average, or we might also see a little bit of a boring phase, which actually would be my favorite, because it still means like that the market is getting stronger and stronger and stronger, that investors have more confidence. If we see really the market breaking to the lows here and maybe even testing the 200-day moving average, which currently sits shy above 4,000 points. Not my favorite scenario, but it is possible. So it's for sure going to be a little bit choppy, because it all again depends, like for the majority of this year, on are we going to see this final last interest rate hike in July or maybe August to then 4.5% in the USA? And are we going to see inflation coming down even further? So, for example, to 3.5% or maybe even lower. This is going to be the main narrative. So you as a trader, you got to be extremely careful there. You can, of course, use the shoppiness. So markets like this are always great, to just trade simple support and resistance here. So obviously for the S&P 500 at least, we've made a new resistance here. So let me just color this one red, of course. So what I would do here for my swing trades really is to see, for example, is my SSG system, which, by the way, you can get access to for free as well if you look into the description of this video, giving me trading signals, trading insights when we are down here at this support level, or maybe up here at this resistance level to the south or to the north. So if we're at the support to the north, if we had the resistance to the south, that would be good trades in my opinion. For Bitcoin also, well, I mean, we could very well, and it's probably going to decide over the course of the next days here, we could very well, if we overcome this area of resistance here, which we are battling here with at the moment, the way is free to go all the way up to, in my opinion, 36 to 40,000 US dollars, which also would be very, very typical for a phase like this. I mean, look here during the last months, 18 months, we had before the last two halvings, 2016, 2020, we also had this great volatility in 2020, things going up like crazy. I remember everybody was screaming when, yeah, the bull market is back. And then we had this boring phase of lower and lower prices with really this slump down due to Corona here to $3,800. Same here in 2016 or before 2016, sideways range when things got slightly a little bit better. So also here, be prepared. We could very well go all the way up here to 38 or 40,000, maybe even a little bit higher, just to go down then to 25 or 20,000, maybe even 15 or 60,000. Everything is possible. That's why I always say, if you want to use this time to invest in Bitcoin, don't try to time a bottom. It's not guaranteed that the market is going to see 20K again, let alone like something like 16K or 15K or maybe 12Ks, which is a number I've heard, circulating on Twitter by some analysts, especially what are they called, Elliott wave analysts. Not so sure. You could, for example, buy a little bit every month. Then you're going to cost average slowly into the market. And then you're going to be in very good shape going forward from 2024 onwards, the halving of 2024 onwards. Okay, last but not least, let's have a quick look here also at the US dollar. And I'm going to take Euro US dollar here as an example. You can do this analysis, of course, on every other US dollar based currency here as well. I choose, by the way, US dollar because US dollar is the classic risk off. So you'll always see the US dollar going strong when cryptocurrencies and stock markets are not performing. So you can see this, for example, here very well, all the way through 2022 when the stock markets went down, euro dollar went down as well, all the way to almost 0.95. Euro dollar going down means, of course, that the US dollar is getting stronger because you need to pay less a US dollar per euro. And I thought actually we were going lower on this as well. So I kind of missed getting out a US dollar here at the bottom. However, what I could see here for the upcoming 2 to 3 months is also, and I kind of sketched this out here in the beginning of April already, and it has been following quite well, my arrow here. So a little bit of downward move, maybe not all the way to 102. I didn't anticipate really that we would very quickly go back to 1009, but I wouldn't be surprised to see something like 105, 106, 107 again. Then in 2024, if that really happens, what I kind of am anticipating, that we see interest rates being lowered again around the same time that we see the Bitcoin halving, we are probably going to see the Euro US dollar around here 115 to 120 again. Why? Because then people are going to shift away again from so-called secured assets, US Treasury bonds, which of course are denominated in US dollars. So if you want to get out of that, you need to sell that. You need to sell your US dollar and exchange them to something else, for example, euro in this case. So I wouldn't be surprised to see something around 115 to 120 in Euro US dollar again. Before that, so let's say as a summary really, and this is what I want you to take away here today. The next 2 to 3 months, maybe 4 months, are going to, in my opinion, be very shaky. There's going to be a lot of uncertainty. You're probably going to hear about recession again, especially should we really see the Fed raising interest rates again. For sure, the old recession ghost is going to come out of the closet. Everybody's going to talk about this. Now, don't be fooled by this, because the markets are not trading what is happening right now. If they were doing this, we should see, like, actually, especially here in Germany, very bad stock markets, because Germany, by definition, has entered a recession over the last 2 quarters. But we saw the German DAX, the German stock index, at a record high just not too many days ago, the highest it has ever been, because the stock markets are not trading what is going on right now or what was going on the last months. They are trading what is going to happen in the future. probably what is going to happen 8 to 12 months down the road. So all this talk about recession and so on and so forth, it's already priced in my opinion. So don't be fooled by this. I see this a lot, especially on mainstream media, also on Twitter, a lot circulating recession. Oh God, we are all going to financially die and so on and so forth. This is already priced in my opinion, at least. And I yet have to be proven wrong by this. So shaky markets over the course of the next 3 to 4 months. If you are investing more long-term, it doesn't matter for you. You can always use whenever the prices are down a little bit to stock up your long-term position again. If you're trading more short-term, you're more into swing trading, for example, you can use this, of course, here in Bitcoin, on the stock market, or whatever you are trading, to just look here for entry signals at zones of support and resistance. And by the way, this one here, of course, is a support now, a bit confusing, so I make it green. So whenever we are down here, good buying opportunity. Those of you who are on my Telegram group will probably remember here around 25,000 US dollars. I said this is a good time to enter now. We had a fantastic trade there, made, I think, with one Bitcoin almost over 3,000 US dollars in a couple of days. And this is simply playing support and resistance from a pure technical point of view, because at those levels you have an extremely nice risk reward ratio. You know, you can enter the market, for example, here, put your stop maybe here under the 200 days moving average, and your target is going to be up here. You're going to earn twice the money that you're risking if your trade is successful. This is what you want to look for as a swing trader. If you don't have the time to look at the charts all day, or you simply don't want to do that, or you maybe have a job that you need to attend and probably your boss doesn't like that you look at charts all day, what you can do is you can go into the description of this video. You will find first of all a link to our Academy Telegram channel, where I post like updates and thoughts, my thoughts on the markets a couple of times every week. So whenever I see something important happening, I'm going to share that there. I'm also talking about personal trades there. If you want to get into swing trading, you might also want to click on our Academy Trading Insights, where you automatically get sent my personal charts with alarms on it every time my so-called SSG system, this is what I call it, sniper signal generator, sees a zone where probably price is going to reverse, and then you can use that, for example, for swing trading, and align this with, are we at the moment at a zone of support or resistance? All right, good. Half hour already that I talked. Quickly need to drink something here. Let's answer some questions. I see a lot of people wrote already. I'm going to make myself a little bit bigger. And by the way, before I forget this, we of course have a promo code at the moment, again, called Academy Live, and you can enter this promo code before you deposit money onto your trading account, and then you'll get 50% discount on trading fees. So this is especially very, very nice if you are scalping the markets, if you are day trading, if you are, more on the short-term side. So use this promo code Academy Live, and less fees is more money in your pockets. By the way, those promo codes we also always share on the Telegram group. There's a new promo code every month, so alone for that, it's really worth joining our Telegram group to get the discount on trading fees, or sometimes deposit bonuses, and so on and so forth. Good. Let's have a look here at the question. I see a lot of questions, so if I cannot answer your question here live, don't worry. Maybe repost it then as a comment under the video later. I'm for sure going to get back to you. Let's see here. I'm just going to start at the bottom now here. A question by Luis Fernandez. It seems that the 31K zone is being difficult for Bitcoin. Yeah, absolutely. I totally agree with you. It is where do we have it? Here's the chart I was looking for. Extremely difficult here for Bitcoin to get over that at the moment, and for a reason. So I really wouldn't be surprised now in the upcoming days to see Bitcoin first maybe go down here to this area around 28,700 to 29,000, test this again before it starts a new breakout, maybe even all the way down to 25 again, because this is what Bitcoin does in this accumulation phase. Things can get very volatile. However, what we saw also, and this is really what I always find amazing about the crypto markets, out of nothing, suddenly you have a couple of those amazing green candles and we're up like 25%. And if you're short, then if you don't have a stop loss, of course, then it's game over for your account, especially if you leverage. Let's go here. So a question here from Eike Borchert. Dirk, your idea about the lowest price BTC will reach before halving? That's a very good question, Eike, and I wish I would have a satisfactory answer for you. I don't know. If I mean, what we traders do is we try to judge the market always by what happened before, right? And if I look at the 18 months prior to the last halvings, we for sure saw those choppy markets. The tendency was, going up slowly, also here, but it could have been extremely choppy. So it's not out of the question that really we see 20K again. We maybe see something like 16 or 15K again. But what you do not want to do is you don't want to bet on that. You don't want to bet on prices going all the way down. That's why I say, for me, the go-to strategy in this phase we are right now in is to every month or whenever you have some spare money over, don't risk money. Of course, you need to buy food for your family. I think that's, you don't want to risk that. Only risk money that you can afford to lose, so to say, because nothing is certain. But every month, every week, or whenever you have something spare left, invest that maybe in Bitcoin, because then you're not making yourself dependent on that price will go down again. Because there's nothing worse than that you had the right opinion. If you agree with me on this, I mean, maybe you say like, no, I don't agree with you. I think we're going to slump below 10,000 again. And but if you agree with me and this becomes really true, and I see us on this target right now, because everything or most of the stuff I've said about the crypto markets and the stock market since October last year has become reality. And I don't want to sound arrogant, but I don't see why this shouldn't continue. And it would be very, very bad or very sad, actually, if I have the right opinion, but I'm speculating on getting the lowest price, and then I'm going to run after the market because I didn't get that price, and I end up being one of the people that then enter the market, once everybody's FOMOing in again, and once your neighbor, your uncle, your auntie, your grandpa, your papa, and so on, your mama come and ask you about your opinion on Bitcoin again, and if they should enter that. I hope this answer makes sense. So as a gist here, as the message maybe I want you to understand is, trading is long-term trading. I'm not talking about day trading here right now. It's not about trying to catch highs and lows. If you can grab like 60 to 80% of the whole bull market, next bull market, you're in very good shape. What you don't want to do is you don't want to be one of those people standing at the sidelines again saying like, why didn't I buy Bitcoin at 20? Why didn't I buy Bitcoin at 25? Why didn't I buy Bitcoin at 30? You are so lucky now that you bought then. Now that's at 300,000 US dollars. Federico has a question about altcoins. Why are altcoins not going up? Very typical for this phase of a market, for the accumulation phase of a bull market, is that money concentrates in Bitcoin, because Bitcoin is, so to say, the least risky cryptocurrency that is out there. Least risky in comparison to altcoins, of course. course. Sometimes in the Telegram group, I post this altcoin season index, for example, as well, which compares like, has Bitcoin outperformed in the last 90 days, the top 50 altcoins, or has it underperformed? And what we are seeing right now, the last 90 days, Bitcoin has outperformed. I think it was 47 or 46 out of the top 50 altcoins according to market cap out there. This is why we also see this Bitcoin dominance at 51% now. And remember, still when we were at 42, 41%, I had this chart, the same chart here with this large arrow where I said we want to see Bitcoin dominance somewhere between, I think it was 48 and 51%. So a bull market gets confirmed. And this can continue. We could see first Bitcoin dominance rising to something like 60 or 70% again. Before then, things switch around to an altcoin season again. And then, of course, the question is going to be which one are going to be the winner altcoins. I can promise you one thing. They are probably not going to be the ones that performed very well during the last bull run, because it seems like that the narrative about altcoins always switches every 4 years. Last cycle, we had, of course, NFTs. We had DeFi until everything blew up because of Terra and Luna. And maybe the new altcoin narrative, if I would have to pick one, will be AI coins. So I'm not a big altcoin investor, but if I would invest into altcoins, it would be probably some sort of AI coins. However, it's very risky. I always would put like 80% of my horses in terms of cryptocurrency on Bitcoin, or for example, also Ethereum, if you like that one better. Question here, what do you think about the EU interest rates? Well, I think the EU is stupid. And I say this as an EU citizen. And they are always lagging behind the USA. So we are seeing, for example, in terms of inflation, that the USA has come a longer way already than the EU. The inflation rate in the EU is still much, much higher than in the USA. I'm not going to mention here, of course, UK. Things are still crazy there, but it's, of course, not part of the EU anymore. This is mainly to the fact that the EU is just slower in deciding things, more conservative. This is also to the fact, in my opinion, that, of course, it's harder for EU monetary policy to align countries or regions of Europe that are, in terms of economic power, very opposite. So, of course, you have like the so-called powerhouses of Europe in terms of economic power, which are usually France and Germany. In terms of Germany, by the way, I don't agree with that much anymore, but that's a story for another day. And then you have more regions that are lagging behind it a little bit in terms of economic power, for example, Portugal, for example, Italy also. So it's, of course, more difficult for EU policy making, interest rate policy making, to decide whether it's a good time to raise or lower interest rates. Probably going to be, again, going forward, that like 3 to 6 months after the US starts lowering interest rates, that the EU is also going to start lowering the interest rates again. But, you know, if you live in the Eurozone and you think like, hey, I want to invest, for example, in the stock market, the stock markets are not going to care very much at one point in the future about EU policy anymore. Good. I'm going to answer maybe 3 more questions and then we'll call it a day. Just to touch base on this again, do you think the Fed will increase the interest rates next month? I don't think so, honestly speaking. I think it's a move by the Federal Reserve right now to show like, hey, we are in charge, you know, we are the ones making the rule. Because remember last year, before they started hiking interest rates, I think it was like 10 times in a row, they said like, oh, inflation is going to be transitory, it's not a big issue. But when inflation stayed, so they were, they kind of lost face, if I can put it into that phrase, maybe. So right now, and whenever you react very strong to one side, in terms of a Fed now not being fast enough, now they overreact to the other side. So they need to show the markets, hey, guys, if inflation rate still stays high, we are going to raise interest rates even more. I don't think it's going to happen, but it could be. It could be that we see it one more time in July or August. That's also why I said, because I'm a little bit uncertain about this, that's why I said, like, I wouldn't be surprised if the markets the next 2 to 4 months are going to be a little bit choppy to the upside and downside. Because Ali Mukhtar said his question is very important to him. Do you think we see Bitcoin rise to 45,000 within the next months? I wouldn't bet on it, and it's gambling to bet on that. We could see until the next halving prices anywhere between 15,000 and 50,000, in my opinion. But I cannot tell you which one is going to come first. What I said earlier, at the time of the halving, so late April, beginning of May next year, I personally am expecting prices somewhere between 40 and 50,000 US dollars. But obviously, this is not going to be within the next 5 months. Just scrolling through here, guys. Of course, I don't want to, because a lot of you guys, of course, are asking like for what are the prices going to be, but we covered that already. So yeah, good one. That one we haven't covered. Yeah, Night Online. Do you have any predictions for gold in the short term? Yeah, I didn't talk about gold here actually, and for a reason. Let me just make my chart a little bit bigger again, because if you watched the last live stream, I said back then. Let me get the chart here first. Here we go. I said back then I would short gold at 2,000 US dollars. Actually, I didn't do it, but there was somebody having a question about this, and back then I said, if we see 2,000, I think my words were again, I would short gold there. We didn't quite go up to 2,000 again. I think as we are continuously going to see over the course of the next months, like slowly a shift more and more into risk on asset stocks, cryptos again, probably gold is going to underperform. But, and this is a big but, gold tends to surprise me every now and then because it doesn't behave very often anymore like it used to behave, when nobody wants risk, buying gold, when people are looking for risk, selling gold. So if I would trade it short term, I would probably orientate myself here on especially the 200 days moving average. This is always a good idea. And then just see where the lines of support and resistance. Probably can also work here, by the way, with the good old FIB retracements. So something like this, see like, are we reaching here somewhere in the area around the 50% retracement, maybe then build up a buy position. It reminds me a lot of what we saw back then. When was it? I think it was like 2010 or something after Fukushima, where gold also went all above 2,000 US dollars, and everybody said like, oh, we're going to 3,000, we're going to 5,000 again. I think it's not going to happen. I wouldn't be surprised actually to see Bitcoin stealing market cap from gold over time, to be honest with you. But like I said, I'm not a big gold trader. Okay, two more questions. Can you see the Forex market growing as the cryptocurrency market grows too? Well, the Forex market is already the biggest market in the world, right? We have like, 4.3 trillion US dollars that are traded every day, Mondays to Fridays. Biggest market, impossible, in my opinion, to manipulate. And so the cryptocurrency market, of course, dwarfs in comparison to that. But as Bitcoin, especially Bitcoin, is going to grow and maybe become something like a legal tender or something, maybe during the next bull run, companies will want to put on their balance sheet again. It's going to catch up, at least, not going to reach like 4 trillion, of course, in trading volume every day. But if it reaches 10% of that, we are already in very good shape, in my opinion. Good. Last question here from Francesco La Tatara. A very beautiful name, by the way, really. Well, first of all, happy to hear, of course, that following my strategies has helped you a lot. Do you believe that Bitcoin can return to maximum levels? Could we use Bitcoin for all future transactions? So a clear yes on your first question. I think Bitcoin is not going to go to maximum levels at 69,000 US dollars. I think we are going well above that. My personal strategy, long-term investing strategy, is lined up with that. So I'm, as you might know, pretty much all in crypto, especially Bitcoin and stocks right now. And I plan to hold on to this at least for 2024, maybe a little bit into 2025 also. That all depends, of course, on how the markets are going to perform. As I said also earlier, I wouldn't be surprised to see something between 100 and 300,000 US dollars in price target. If we want to believe in the stock to flow model by good old Plan B, who also just released a video 2 days ago, the stock to flow model, I'm not going to explain it very much in detail right now, but it basically says like fair value of Bitcoin is around 50K at the moment. After the next halving, this is going to jump to 500K. So the prediction from this model is even higher than my my puny 100 to 300,000 US dollar prediction. But of course, this is my prediction. You can. It's important that you do your own due diligence. Don't just blindly listen to somebody. I might be wrong on this. And so always do your own due diligence. Never risk more than you can afford to lose, and so on and so forth. This is really important. I'm just here, to show you ways how to analyze the markets. Doesn't mean automatically that you have to please agree with me on everything or anything for that matter aspect. Many more questions here, guys. We don't have time anymore to go through all of them. Thanks a lot for joining me today again on this live stream. It was a pleasure. Again, time was flying like crazy. Again, please leave us a like, subscribe to the channel if you haven't done so already. And if I was not able to answer your question, or maybe you're watching a recording of this, do me the favor and leave your question in the comments down below. I'm going to answer your questions then. Also there, if it's a more complex question, you can also, of course, send an email to academy@primexbt.com. I'll make sure that I personally answer your email then as well. And don't be shy, get in touch with us. And until then, guys, happy trading. Take care, everybody. And my number one rule, always use a stop loss. Take care and bye-bye.